very excited to bring you this topic of checkbook control with IRAs through mainly an LLC, but we'll cover a few different areas of that as well. If you do want a copy of the slides, they are attached as a handout here today, so feel free to grab those right there. And again, if you do have any questions, make sure you fire those off through the chat function, and I will get those addressed as they come up. So without further ado, let's go ahead and get started. My name is Alex Perny. I've been with Advanta since 2012. I've had a lot of experience doing these kind of things for clients over the years. Beginning part of my career started out, with actually doing investments for clients. I've had thousands of different investments that I've been a part of in the early part of my career, and I've seen these things used quite often into different effectual outcomes. So again, if you have questions on how this stuff works, I'm always happy to help you out with those. If you want to chat with me after the presentation, all of my contact information is listed right there for you. If you're new to Advanta, we always like to give a little bit of a who we are at the beginning of these presentations. We have over 20 years of industry experience, specifically in self-direction and alternative assets. We didn't start out as a different type of firm and migrate into self-direction. We started as self-direction and we're continuing down that pathway. So we have a lot of specific experience in this very kind of niche market. We really like to lean on that and try to drive the point home that we really do know what we're talking about with this. And to that point as well, we maintain over $3 billion worth of self-directed assets for clients. So no stocks, no bonds, no mutual funds, strictly self-directed alternative assets, real estate, private LLCs, everything like that. We have a very large amount of this type of asset class under administration. And with this kind of hands-on, very specific type of investing, we offer dedicated account management to any and all clients who are clients of us. You don't have to have a $1 million account to get $1 million service with us. We have dedicated service for every single client, whether you have a $2,000 HSA or a $2 million IRA, you always have a dedicated client service representative you can reach out to, get everything handled with your account, so that way we can make sure we do things efficiently and to the best effect of the investment you're trying to make. Before we get into this a little bit further, we do need to read off a quick disclaimer. We have to keep the attorneys happy. We're going to be getting into some real specific topics about, forming entities, making decisions about the trajectory of your investments, how you're going to administer those things. So please make sure you understand that, trust but verify. You really need to make sure you get some outside counsel and help if you're unsure on anything, especially on the topics we're about to cover. But specifically, Advanta IRA and our employees do not provide investment advice or endorse any investment products. All information and materials are for educational purposes only, and all parties are encouraged to consult with their attorneys, accountants, and financial advisors before entering into any type of investment. Let's see, one quick question. Let's see, someone asked, will there be a transcription of this available? Not necessarily. We do post this on YouTube after the presentation, but there's not necessarily a dictated written out transcript of the presentation. But if you would like a copy of the slides, they are attached as a handout to this, and the recording will be available afterwards as well. I did see another question on there. I will get to you in a moment, but we just want to make sure we kind of get this thing moving, and I certainly will address those for the presentation. Keep the questions coming in. Haven't heard of a self-directed IRA? It's really not necessarily that uncommon. The broader market of retirement plans in the United States are capitalized to a very great effect by large broker dealers. It's definitely the path of least resistance to have an IRA, roll over your old 401k, and just have it at a broker dealer and buy stocks, bonds, and mutual funds. Keep in mind that the market for retirement plans in the United States is almost $40 trillion, and only about 4% of that is self-directed, and that even includes people that pick their own securities in a more public fashion. So again, this is not something necessarily new or that's just come out in the last few years. You've been able to pick and choose your own investments, so long as that the custodian's willing to hold it and it doesn't violate an IRS rule, which we'll get into here in a moment, basically since 1975. So again, this stuff is not necessarily new. You've been able to do it. It's just not necessarily a very large part of the market. But when you're talking about that much money, 4% of it is still billions and billions of dollars. So the different kinds of plans that you can self-direct and you can also use checkbook control with are offered right here. It's basically any type of retirement plan or account that we offer here at Advanta. So individual plans being your traditional IRA, your Roth IRAs, inherited IRAs of either type. We have specific savings accounts, namely the health savings account and the education savings accounts that you can also self-direct with checkbook control. And then we have business plans as well. Solo 401ks, SEP IRAs, and simple IRAs can all be checkbook control as well. Solo 401ks are interesting from the standpoint is that you don't necessarily need an entity to stand between you and the account and the actual checkbook control. Really kind of cool, and I covered that I think in December 16th. I did a webinar specifically on those types of plans and how you can maintain checkbook control without a subsequent entity in those. Definitely a very, very cool aspect of 401ks. Now, some examples of investments that you can pursue with self-directed IRAs and especially with checkbook control IRAs, things like rental homes, commercial real estate, any type of form and flavor of real estate, again, can typically be accomplished. Again, so long as that it's not something that is, personally owned or self-dealt, or basically any that is with outside of arm's length of you from a transactional basis can be accomplished with this. Again, that goes everything, even into oil and gas mineral rights. You can do a farm. We've had people that send out funds for people with equipment and also farm animals. Again, the amount of different types of assets you can pursue with these things is almost as long as is almost as broad as the day is long. I kind of tripped over my own words there, but we just like to kind of illustrate that while most people typically come to us from the perspective of real estate because it's by far and away the most popular investment option for people that they pursue with self-directed IRAs, it's not simply just that. You can do basically really anything you'd like to, again, so long as that's not a prohibited investment, which we'll cover in a second, but just to enumerate is basically you can't own a life insurance policy and can't buy collectibles, and there's certain people you can't deal with. So long as you're operating outside of the scope of those prohibited items, then really the investment options are kind of up to you, and the fact that you can really make something work, to the best of your ability. Now, to kind of go back to the things that you're not allowed to do, there are certain prohibited investments. So think life insurance is the main one, collectibles, antiques, alcohol, artwork, stamps, rare coins. Now you can buy certain coins and they have to be traded on their bullion content value. So think your currently minted and issued gold American Eagles or silver maple leaves, typically things issued by a governing body of a country typically are good, or so long as that the refiner guarantees the purity of the metal to a certain degree. So again, you can definitely buy coins, you just can't buy like rare ones that have their value based on their rarity or scarcity, if that makes sense. Now, there are some prohibited transactions from the perspective of people you can't deal with. And it's really important, especially for checkbook control, once you are taking control and don't necessarily have the eyes of the custodian looking directly on everything that you're doing, that you really understand like whom you can and can't deal with. So the disqualified individuals will be listed on the next page. And it's really kind of nice to see that from a perspective of the infographic, and I'll delineate that in a moment. And then there's also some rules with regards to certain entities that you might invest in might throw off certain specific kind of taxes that would be applied to IRAs, mainly if you're trying to operate a trade or business. Now, I know we're talking about LLCs today and trust to a smaller degree, but it's not necessarily like that. What we're talking about with buying like a business would be, the example I like to use is owning a laundromat, right, with your IRA. If you're owning like an active trader business or a convenience store or a pressure washing company, something like that. If you were to own a business entity and try to run it through an IRA, without a C Corp in the middle, the IRA would have to pay taxes on that. So again, just understanding that there are certain instances as well from the rules perspective that might generate some taxes for an IRA. And again, the name of the game mainly with tax deferred or tax sheltered investing is to not pay taxes, or at least defer your taxation to a later date. So the disqualified individuals that I was speaking about are listed right here for those of you looking. Basically, it's your direct lineal descendants and ascendants of you personally. And this means you cannot directly buy and sell anything to or from these people. So if you personally own a piece of real estate or any type of asset, you can't sell that to your IRA. Conversely, let's say your parents had a need for housing, and you bought a property with your IRA or your checkbook control LLC, you couldn't have them live in it. So it's acquisition and utilization, both sides of that coin. Any of the people directly up and down from you in your family tree, you can't directly deal with. Now, we'll get into partnering with these people potentially. And again, that's a different scenario. You can't sit on opposite sides of the closing table from these people, but you can both come together on the same side of the closing table with these people. Now, there are people in your family that are not disqualified. Think brothers, sisters, aunts, uncles, cousins, distant relatives, friends, colleagues. None of those people are disqualified. But again, it's important to understand whom you can and can't deal with, especially if you want to take control of your IRA assets in the function of having an LLC, where you don't necessarily have the IRA custodian kind of looking at everything on a transactional basis. All right, so we have some questions I'd like to get to before we get too much farther in this, because I saw some filtering in, and it's kind of a good breaking point. Let's see, one question asked, can hard assets such as real estate, precious mineral deeds, etc., be transferred from one IRA to another, i.e. from one custodian to another? If so, can they be transferred from a normal self-directed IRA to a checkbook IRA? The answer broadly is yes. So if you have, and to kind of elucidate this to everyone else, if you have a self-directed IRA custodian, again, we're not the only ones that do this. If you're with someone else that offers this service and you have non-traditional assets there, you could establish an Advanta IRA account. We could transfer everything in kind, so you wouldn't have to liquidate your positions or sell everything. We could transfer everything in kind, and then you could form a checkbook control LLC and then contribute all of those assets, whether it be something like, again, what was indicated here, such as mineral deeds, precious metals, real estate. You could have that all moved into the ownership of that LLC that the IRA owns. Let's see, next person asked, what about antique cars? No, as much as I would like that, being a big gearhead myself, unfortunately, no, you cannot have you can't buy like an antique car, because that, again, derives its value from collectability. It's not something that's, kind of traded on just a par value of it being a certain thing, right? So unfortunately, no, you couldn't have your 69 Copo Camaro held by an IRA, as much as that would be pretty cool to do. Let's see, can my Roth buy stock I own in a private company? If so, what are the steps? I'm guessing I'll need a third party to figure out what it's worth. So in this case, again, oh yeah, you said answer is no. But to kind of, again, give a little bit more context to that, your IRA can buy private stock, right? So let's say this company had an additional offering, right? You could certainly own a portion of it. Again, so long as you're not an officer of the company, if you just have a private stock offering that you had subscribed to personally, well, no, you couldn't just buy those shares from yourself personally. If they had an additional offering, let's say they either opened up the same offering or they had an additional capital like a Series B offering, and you maybe were Series A common or Series A preferred, you could come in as another investor with your IRA and subscribe to a new offering. So while you couldn't buy your shares, again, you can definitely buy private stock. That's not a problem. Let's see, someone asked, can I get a copy of the webinar? Yeah, it'll be posted on YouTube, and also the slides are attached as a handout. And last one, let's see, the last one before we keep moving on, said, didn't see crypto or liquidity farming DeFi listed on the permitted assets. Yeah, you can do that. It's certainly allowable. I should probably put that on there, because that is one of the more common use cases for checkbook controlled IRA LLCs. But yes, you can certainly buy cryptocurrency and the like with an IRA owned LLC. And last one, I see some more questions, but can I pay off my home with my Roth IRA? No, you cannot do that. All right, keep the questions coming in. We will address them as they come up. So here's where we're going to kind of get into the actual meat of what we're talking about, checkbook control. Now, there's two basic ways to look at an IRA, right? You have the standard model, where you have a custodian and administrator handling the account. So you open up an IRA, and then you would like to buy something. Again, you transfer the cash to, in this case, Advanta, and let's say you found a property, right? Or you wanted to lend someone money. You would reach out to your dedicated account manager here and say, hey, I'd like to do this investment. We say, great, we'd work with you and whoever else is a party to the transaction. Real estate thing, listing agent, title agent, maybe there's a real estate attorney. We coordinate with everyone, get all the documents in good order, sign everything, make sure everything's funded correctly, and then we would hold the original indicia, whether that be a recorded deed, mortgage, original promissory note. Again, whatever it is that you're actually buying, we would have to maintain the original copy of that, stock certificates. If you own precious metals, making sure that the storage depository is properly in the name of the IRA, things like that. But again, everything flows into and out of your IRA here at Advanta. Now, checkbook control is removing that aspect of it. So basically, the initial establishment of the account is exactly the same. You bring over the cash, and then the entity, so the IRA then owns an entity, and it would either typically be a LLC and sometimes a trust. I mean, it's not as common, and we'll get into that in a second. But everything basically, once the IRA we at Advanta have moved the funds to the LLC, or I should say the entity, at that point, then the client or the manager or the trustee of the trust will be the one directing all investments, record keeping everything on the side of the LLC, and not directly involving the custodian, which again, sounds great at high level. Say, hey, look, I don't have to go through the, quote unquote, red tape of the custodian to get things done. But there's a reason and a value to what we do. And again, I like to highlight the benefits of doing this while also being cautious with saying that this is by any ways like the best way to do things, because the responsibility of making sure you do not do anything prohibited, that whole burden falls to the client. You really need to make sure that you understand the rules, and a small mistake could be a very large fly in the punch bowl, if you will. Okay, so there's two different ways to achieve checkbook control. The primary way that almost all of our clients, and I would say probably 99% of our clients, go with is an LLC. They are relatively cheap to establish. They are kind of easy to understand. There's a lot of literature out there. And in the context of who can be the manager, meaning who can sign on behalf of this entity, that can be the client. However, with a trust, you cannot be the trustee of an IRA-owned trust. And the reasoning is that a manager of an LLC is not meet the threshold as a fiduciary. One would think, but again, just from a strict legal perspective, it doesn't meet the qualification of a fiduciary, whereas a trustee of a trust does. And pursuant to Internal Revenue Code 4975, an IRA client cannot act in a fiduciary capacity to their own IRA. So while you can have an IRA be the grantor beneficiary of a trust, you cannot sign everything on behalf of that trust. So just keep that in mind. So for checkbook control, if you as the client want to be steering the ship, want to be driving that car, it has to be an LLC if you want to go that route. So check writing, who manages the cash in the LLC, it's going to be the manager, and the trust, it's going to be the trustee. Again, similar roles, just different name. The titling of the assets. So previously, if you're going to use Advanta directly without any subsequent entity, it would be something like Advanta IRA, FBO, John Smith, IRA, 1234. But in checkbook control, that's how you would title the ownership of the entity, so the membership of the LLC or the grantor of the trust, but all of the assets would be in the name of that trust. So think Cerberus Investments LLC or Cerberus Investments Trust, dated 1/21/24. That's how you would title the asset subsequently. So again, that's kind of the high level of the two different routes you can go. Today, we're going to be focusing on the LLC. Again, it's significantly more common. And again, I like to kind of speak to the broader audience, but basically everything is analogous to one another. So if you wanted to go the trust route, really the only main difference besides just, from a concept perspective, instead of an operating agreement, there's going to be a trust document. Instead of a manager, there's a trustee. But the primary way that these two things split is that we will allow you to be the manager of the LLC, but you cannot be the trustee of an IRA-owned trust. Alrighty, now let's get some questions knocked out, and then we'll talk about the formation of these things. Let's see, can you make an investment into a private credit fund? Sure, you can do that so long as that it's not a private credit fund that you own. Let's see, can I buy an option to purchase a piece of property at a certain price? No, you can. Yeah, you can definitely. I mean, what you're talking about right there with buying an option basically is wholesaling. Yeah, you can absolutely buy real estate options you can do it with an IRA or a checkbook LLC. It neither really matter. Can my Checkbook LLC open a brokerage account? Yes, you can absolutely do that, and we have a great working relationship with Axos Invest. We can actually facilitate a brokerage account directly in the IRA, or if you'd like to go through the LLC, we have a great team over there that handles the brokerage options for our clients. We can definitely connect you over there, not a problem. Can we make a loan, hard money, to a non-disqualified family member? Yes. Remember, a non-disqualified family member means it can't be a mother, father, son, daughter, or spouse, and anyone farther up and down that train. So brothers, sisters, cousins, aunts, uncles, twice removed. Yeah, those are all fine to make a loan to. What is the DOJ? I don't necessarily think of the DOJ would necessarily be who would be necessarily looking at this. The Department of Justice does have the new requirements for reporting beneficial ownership, so the BOI information that has to be reported. But checkbook control, again, for the most part, well, I mean, again, up until recently, they didn't necessarily know who owned any of these depending on the state you registered in. But again, as far as the transparency for an audit, again, there really wouldn't necessarily be one. Even in the BOI report, the anonymity is still relatively well maintained. But again, I wouldn't perceive this being any more of an audit than anything else anyone would do. And keep in mind, just round numbers, the United States has an audit rate of about like a little bit less than 2%. And for this to be examined, your IRA would need to be audited specifically. So again, personal audits have a scope, and typically they, again, in almost 13 years of doing this, I have seen 2 audits come through for my clients. Again, not necessarily 2 Advanta clients have been audited, but I'm just saying what I've seen from a practical perspective is that it just doesn't happen very often. Now, again, to that point, I always recommend people operate as abide by the rules and regulations of any governing body as best as you can, and ideally don't violate any of those rules, because the IRS are as many things, but a sense of humor they typically don't have. So again, to that point, I don't really see that being too much of a problem. Last 2, if I wanted to invest in multiple syndications, can my IRA own numerous LLCs? Well, yeah, but if you wanted to do multiple syndications, you could just do them through the same LLC. You could have one IRA-owned LLC that has 4 different limited partnership interests in 4 different commercial real estate projects. Could you do 4 different LLCs if you want to? Sure. I just don't really see the perceived benefit for the cost that would be incurred in having 4 different annual registrations with particular states, 4 different filings that you have to do every year for those LLCs. Then also the different custodial fees you're going to see from us, when you could all just put it into one bucket. All right. Okay, and I see more questions again coming in. Keep them coming in, and we'll address those as they come up, but let's just keep this thing moving. So forming a checkbook LLC. So the formation of the LLC, again, is going to be pertinent to the state that you want to register it. So we got 50 different flavors in this wonderful country of ours, but most of them are relatively analogous to one another. They're not going to necessarily be much different from each one. They're all going to have, again, a basically similar procedure. So you're going to need to file with where the LLC is located. File in the state where you want to domicile the LLC. You're going to need to list the basic LLC information, the address, the manager name. There's going to be, that's all legally required to be filed. Initial filing fees vary from state to state. Think on the low end, maybe 40 to 60 bucks. The high end, 500, 600, $700. In general, your coastal states, high population density states of like major metro areas. So your Californias, Washingtons, Oregons, New York, Illinois, those are going to be the more expensive states to register in. You don't necessarily have to register the LLC in the state that you reside in, and you don't have to register in the state of Florida where we are headquartered. Generally, the cheaper states are going to be states like Florida, Georgia, Alabama, Texas, the Carolinas, Tennessee, the southeastern states. And generally going to be the cheaper ones, and some of the mountain states as well. With that said, again, key point, you don't have to do it where you live. You can do it wherever you want to. Perceptibly, I don't really see a benefit or a downside to any of them. In reality, it's just, picking one that makes the most sense from you. And if you have been legally advised by someone, go with that legal advice. Again, we're not here to advise you. It's just on a high principle level. Those are the states that we see a lot of people do because they're cost conscious and there isn't much of a perceived benefit to using one versus the other, unless there's a specific route that you need to take that you've been advised on, then go that way. In most states, you can do this online or mail if you want to. Then you have to obtain a tax ID number. This tax ID number is going to be specific to the entity. Now, it's easy enough, and I'll actually show you an example of the form you need to file here in a second, but you're going to have a tax ID to establish a bank account for the LLC. When you go into a bank, you're going to need to take in a couple different things. You're going to need to take in a copy of the articles or the verification from the Department of Corporations in that particular state. You're going to take a copy of your SS4 tax ID application verification, which is going to say, hey, Sunshine LLC Investments is a valid entity, and typically a copy of your driver's license that matches up to show that, hey, I am who I say I am in relation to being the manager of this entity. You don't need to go in there and start giving all the information about this being an IRA-owned LLC, XYZ. Again, not that you should be anything more than 100% truthful with your financial institution, but again, just from this perspective of precisely what you need to provide them, that's it. Copy of the articles. You do not need to provide them a copy of your operating agreement. So a copy of the articles that has the name of the entity, who the manager is, who can act on behalf of that company, that's who you register with the state with, and a copy of that tax ID application for the entity, and then obviously identification to verify you are who you say you are. So when you do the tax ID application, again, this can be done directly online. It's a super easy process. The Social Security of the LLC manager. So if you as the client are managing the LLC, you're going to need to verify who you are with the IRS to do that SS4. Now, that just means that they understand who's on the other end of the keyboard, right? They're not reporting anything to your Social Security number. It's just saying, hey, John Smith is on the other end of this internet connection. That's great. We're going to generate a tax ID, and that's separate from you personally. But I have had clients over the years pretty routinely ask me that question saying, hey, hold up, let's pump the brakes. Why do they need my personal social? I thought this was all my IRA. I don't want to be taxed. Don't worry, that's not the case. And then again, if you need to file any tax filings for the LLC, this is the tax ID number that you're going to use. And again, we've pretty much covered opening that bank account as well. Again, certain documents you need to take in there to do that. So filing the articles of the LLC. You can name the LLC anything that you'd really like to. However, you do not include the name of Advanta or IRA in the name of the LLC. A few reasons for that. One is that Advanta, we are our own company. Your IRA-owned LLC has nothing to do with us as a business entity. Your IRA specifically as its own entity certainly does. But again, the membership of that entity is going to be something to the effect of Advanta IRA for benefit of John Smith. But the name of the LLC is whatever you want it to be. And I typically encourage clients to name it something relatively innocuous. I've had clients that have named them all sorts of fun and interesting things over the year. But keep in mind is that this is going to be the forward-facing view that anyone that you interact with is have of your retirement plan. So if you want something anonymous, again, maybe you don't do retirement in there. So again, Sunshine Investments LLC, something basic, easy to remember, hopefully probably pretty professional as well. We all have those old email addresses that we're kind of ashamed of. But again, just name it what you love and go forward from there. Keep in mind that most states are going to require that LLC or LCB in the title of the LLC or the entity's name. So just keep that in mind. You're going to have a registered agent address. This is basically who the state is going to put notification to. So if there is something that is a required notification to the entity, that is who the registered agent is going to have to receive legal notice and service of process. So if there's a lawsuit, any type of legal action, credit action, it is, they need to have a verified place where they can provide service or service to. So that's who the registered agent address, and typically must be physically located in that state. So if you are residing in the state that you register the LLC in, well, you could be the registered agent if you wanted to. But if you are registering a LLC in a state outside of where you live, well, then you might need to employ a third party to be the registered agent. And every single state has a multitude of different registered agent services. You pay a small fee and they'll act as the registered agent just to receive process and notifications and stuff for the LLC. Now, the management being the third part of this. So you have the name of the LLC, you have the registered agent, so basically where they're going to send stuff and serve process to the LLC, and then you have management. So the articles of organization, and again, states call these things different things. But again, in general, when you register with the state, they're going to provide you articles. And that's typically the catch-all term, say my LLC articles. Again, a state might call it something different. Don't be alarmed, but whatever the state provides you when you register, and you can call your articles. Now, the articles, or whatever document that the particular state calls it, are going to name the manager. And you're not necessarily required to have a manager that lives in that state. Some states do. I can't off the top of my head remember which ones do, but they do require a locally domiciled or locally a local address for a manager and a registered agent. And I would assume states that have that kind of requirement probably are going to also have services for management as well. But again, articles are your manager, who's this, and that's going to detail who's authorized to sign documents, what your hierarchy in the company is. And with an IRA-owned LLC, you cannot have a managing member. The IRA would be the manager, and it needs to be a manager-managed LLC. That's kind of a real key important point to this, is that a lot of times, if you go to have especially a single member LLC, it's going to be member managed, meaning that the sole titled shareholder, and remember in this case it's going to be the IRA, would also be the manager. So member managed. In this case, the member would have no signatory capacity on behalf of the LLC. You want to maintain that personally, or in whomever you've appointed to be the manager of this LLC. So it needs to be manager managed. Easy enough to remember, but a very key point, especially if you're maybe not using a service provider like an attorney or someone to draft your operating agreement. That operating agreement is where you state the actual management of the company in a, or you're gonna actually kind of name that for our purposes. So it needs to be manager managed, not member managed. Now, I mentioned operating agreement in the last slide. Just forming an LLC, and I'm assuming probably there's one or two or maybe a lot of people on this call who have formed an LLC before, right? And from a very baseline, minimum requirement, you don't need an operating agreement just to form an LLC. You can go to the Division of Corporations website in your particular state, type it in, pay the fee, apply for a tax ID without ever having to have an operating agreement. So a lot of people come to us and they'll be like, hey, look, yeah, I can register the LLC, no problem, get this done, be quick and easy. And while this process is relatively quick and pretty easy, the operating agreement is a very important document in this situation that is something you need to get from some type of third party. Now, if you've done LLCs before, you have operating agreements that you have ready access to. Nothing wrong with maybe utilizing one of those if you feel that it is pertinent to what you're doing. We don't have a requirement on where you actually produce this document from. We just have some requirements on what it actually contains. So the LLC operating agreement is going to lay out how the LLC will be run. So who the manager is going to be, who the member, who the shareholder of that entity is going to be, what the rules and responsibilities are, how the thing is actually going to operate. So there's not necessarily a right or a wrong operating agreement. Again, I'm sure if you're going into your corporations class in law school, your professor would definitely have an opinion on right and wrong. But again, from our perspective, it's not like we have a template that we can provide you. There's just minimum information that we need to see. We need to see who the member is, and that needs to be vested correctly in the name of the IRA, which will provide that to you. We'll need to see that it is manager managed, not member managed. And again, making sure there's some other small things like, if you're going to act as the manager of the LLC, making sure that the operating agreement doesn't say that, hey, you're being paid a wage of $10 an hour to act as the manager. Just high level things, making sure that it kind of at least meets our minimum requirement. And the operating agreement will ultimately be signed by the manager as well as the member. So that's kind of the last thing that Advanta would sign on behalf of the LLC. Once we sign the operating agreement and we move the funds to the LLC, at that point, the manager, or if you have named yourself as the manager, as the client has named himself as the manager, at that point, then is when you are kind of off to the races and signing everything. So what are some minimum requirements for this? It needs to have an effective date, so you got to date the thing. It's got to name the members, the self-directed IRA and the managers. It's got to detail the limited liability of the members and managers, how members may be admitted or removed from the LLC, outline the voting procedure for various issues, taxation of the LLC, signatures. Again, those are kind of minimal things that it has to include. And it also provide provisions pertaining to how do you wind the thing down, how do you terminate it, how to address disagreements or arbitration among members and managers. And keep in mind, if it's your IRA and you as the manager personally, again, maybe that's a little bit metaphysical to get into about how you have your own internal disagreement. Again, not for me to say, but again, just things like that are what can be included. And depending on how thorough or who's going to be drafting it, these are things you're probably going to see in that document. Again, keep in mind, we're not the ones that are going to be drafting it for you. So just bear in mind that these things may cover a wide spectrum of different things, but at minimum, just kind of listed out what it has to include, and then it also may include other things. I see someone raise their hand. I do not call on people directly. Just type in the question if you got one. But here's a good place for us to take a little bit of a break and answer some questions. So this is a long one. Let's see, today I have a 401k from my employer. The money in the account is mine, but the account is administered by my employer. When you have a solo 401k, is that basically a 401k for your own LLC? And then you as the individual have an account under the 401k? Okay, I mean, to break it down, if you have a 401k with your employer, if you're under 59 and a half, you typically can't get money out of that 401k for your own self-directed investing. They might allow you to withdraw just your contributions, but again, the easiest way to do for that is just say, hey, look, I'd like to do an in-service rollover. They'll tell you what you are or aren't eligible to do. A solo 401k would be something that you would attach to a personally owned business, not an IRA-owned LLC. If you have another side hustle or some business that you run, you can have a solo 401k for that. It gets pretty far into the weeds of determining, like, the purpose of answering this question on how you qualify contributions and things like that for it. But again, I'd be happy to talk with you offline more to that effect. Let's see, does the account earn any money when it's not being used and just sitting in the account? Well, if it's in the IRA-owned LLC, I mean, that's the discretion of you. I mean, it's not earning anything unless you put it in some type of investment. There's plenty of different things that you can plug it into. Specifically here at Advanta, no. But in the context of if you're doing an IRA-owned LLC, we're only going to be holding your funds for however long it takes you to get everything done for the LLC. So typically the time frame for these kind of investments for how long we would actually be holding the funds would be something to the tune of maybe a week, maybe 10 business days. So really not too long, so you're not missing out on barely anything. Can the assets in the LLC be at risk of a lawsuit, i.e. your Roth? Do I need multiple member LLC? Absolutely. Depending on what your LLC is engaged in, especially a concern with things like real estate, someone, if you have a liability action or there's some type of lawsuit that's filed, it's filed to the owner. The owner's the LLC. And typically lawsuits can attach to other assets of that specific LLC, so keep that in mind. Now, IRAs from a general standpoint, and I will preface this next statement by saying liability extensions and how this works is different from every single state, and depending on what action you have, it can vary widely. So when it comes to liability, if you are engaging again in something that could produce a liability action, a lot of times it's real estate related, right? Like actually owning real estate directly, not like invested in a limited partnership or someone else's deal or something like that. But yeah, it can certainly come back. Now, what I would say, look to the numbers. Liability actions from especially things like real estate, the numbers look to be something like 85% of things settle with insurance. So making sure you're properly insured and you have good insurance will absolve you of the majority of anything that's going to happen. Secondly, from that, should you have a multi-member LLC? Potentially, yeah. I mean, different states view LLC protections different. The state of Florida, it's generally perceived that a single member LLC does not offer the liability protections that a multi-member would. They see it as a pass-through to the member, which again, the member in this case would be the IRA. So depending on how you have things structured, should you have a multi-member LLC? Shouldn't you? Not for me to say, but again, there is some perceived benefit, depending on the state you're in, if that's a concern of yours, to look at. Again, that is definitely a question that, the $300 you maybe pay to an attorney to answer that question and have someone to fall back on is cheap insurance, right? $300, a couple $100 to ask that question and get a verified answer on how you should be operating this thing. If I was doing it, it's something I would do. Let's see. I have multiple small dollar accounts, HSA, ESA, Roth. Do these all have to have separate LLCs, or they kind of go in one LLC with proportional membership interest? They can. There's some additional considerations to give there, but again, I'd say maybe reach out to me and we can kind of parse through that. Can the manager and the member be the same person? No, we did cover that. Again, it's the aspect of the IRA would be the member in this case, right? So the IRA is not going to be the manager because we're not going to sign everything downstream. You're going to want to have it's going to need to be manager managed. So you as the IRA client are different from your IRA. The IRA and you are two completely separate entities. So you would be the manager, the IRA would be the member. Let's see, I'm confused about the tax reporting of the LLC as a single member. Managed LLCs aren't required to file the IRA earnings of the LLC as a federal ID number. What reporting is issued to report the annual income or loss? Well, keep in mind that a single member LLC can be considered a disregarded entity for tax reporting purposes, right? So in a lot of cases, you may not necessarily even be required to file a federal report. Now, if you have a multi-member LLC, yes, you do have to file a federal report, and typically there's going to be no taxation if it's a multi-member IRA-owned LLC. Now, if the LLC does have to do any type of filing with the government, it does need to use its own tax ID number that's been applied for. So that's kind of how that would run. And again, it wouldn't necessarily be the IRA that's needing to pay a liability per se, unless it is a UBIT or a UDFI liability, in which case that's a whole other conversation for another time, because that really get into the weeds. But at a high level, again, typically, a single member IRA owned LLC, if you treat it as a disregarded entity for tax reporting purposes, then there's really nothing to do. Again, that's not necessarily me telling you that you should be doing that. It's just that is an avenue and an option. But when it comes to making sure that that's done correctly, talk to a tax advisor. Make sure that when you set this up, that they are in agreement with what your ultimate goals are and making this as easy and seamless as possible. But again, I think that kind of gets to the core of that question. Moving right along, again, filing for the tax ID. The form is SS4 with the federal government. Pretty basic information. If you use the online portal, it will walk you through exactly what you need to plug into. I've gone through that portal countless times for my 401k clients. It is pretty easy to deal with. If not a bit antiquated in its actual look, it'll get you where you need to go and cross the finish line. It'll spit out a tax ID number for your LLC within about 5-10 minutes. Opening a bank account with the LLC. Again, I covered this, but again, it's good to kind of refresh it. Is that when you go into the bank, bring a copy of the articles, the SS4 tax ID verification that you got from the IRS. You need to name yourself as the authorized manager, signer of the LLC bank account. Again, if possible, you don't necessarily have to provide all the beneficial owner information to the bank. It's not necessarily information that they really need in order to be able to open the account for you. Now, with the DOJ and the beneficial owner information, the FinCEN requirements for that, yeah, you're going to have to tell the government who owns these things now. And you have to do it within 30 days of formation of the entity. So there are some additional people that you have to tell who owns the LLC, but typically the bank's not that person. So, and the only reason I say that is because you go in, you talk to a bank teller, the confusion that might be generated by you starting to mention a really kind of specific use case, IRA-owned private entity, is just not something that they're going to understand. It might just cause friction where friction doesn't need to be present. Again, this is at the end of the day, you just need a business checking account for this LLC. That's it. And to do that, you need a copy of the articles, you need a copy of your SS4 tax ID application, and a copy of your driver's license. If you're named as the manager on the articles, then you should be good. Again, we have done thousands of these things for clients, and that is the path of least resistance, excuse me, for setting up the bank account. So how do you fund one of these things, right? So here's kind of an example of how it goes. So Joe has 150 in a brokerage IRA. He wants to invest in some real estate, needs the funds to do it. He wants to do it at county auctions, which again is a really specific use case where checkbook IRAs really, really work well. So the way that this works is that Joe first needs to open the account, right? The first thing you need to do before you get working on the LLC, I know people are like, oh, it's so easy, I'll just get it done. Get the IRA open first. It's going to cause a lot less issues, and you're going to have to go back and correct way less if you just start with the IRA. Start square one, you need an IRA for an IRA to own an LLC. The owner needs to be in existence somewhere. So you complete the application, get the process for getting the funds moved over. We'll help you out with all that. So at that point, when the IRA is opened, then you choose the state to set up the LLC in. Again, it does not need to be the state that you live in. It does not need to be the state of Florida where we're headquartered. Where you do that is completely up to the discretion of you. We are happy to work in any of the 50 states, not a problem. You got to choose a name for the LLC. Again, that should not include the things like IRA. It should not include your personal name in the name of the LLC. It does have to include the acronym LLC or LC at least for most states. You have to get the articles, and you got to get the tax ID number. So then you have to have an operating agreement drafted. The IRA needs to be listed as 100% owner. It is the sole shareholder. Now you can do multi-member partnerships. That can be partnerships between the IRA and taxable individuals. It could be the members of this LLC, it could be another LLC, it could be a trust, it could be multiple IRAs. It could be a blend of all of it. It really doesn't matter. But specifically, the operating agreement has to show the owner. So whoever's contributing capital into this entity has to be named on there. But let's go back a little bit. Let's operate on the vein of simplicity for what we're talking about. If it's just going to be this is just going to be your IRA, you just want to have checkbook control, the sole member, so the single member in this single member LLC is going to be something to the effect of Advanta IRA, FBO, which is for benefit of Joe Smith IRA 12345. Now getting money into it. So Advanta IRA, we sign the operating agreement after Joe approves it. We issue a check or wire the funds to the new LLC bank account. And then at that point, Joe's off to the races. He enters into a contract to buy the real estate. As the manager, Joe signs all the closing documents on behalf of the LLC. Joe deposits the rent payments from the LLC and his tenant back to the LLC bank account and pays all expenses from that. Now, you can kind of, again, extrapolate this example to anything you're doing. Someone asked about cryptocurrency. You could open up a crypto exchange in the name of the LLC. That LLC could buy a hardware wallet specifically for the cryptocurrency that it's going to be buying and selling. The funds to fund that crypto exchange that's open in the name of the LLC would come from the LLC. You would place the trades and everything would run forward like that. If you're going to be engaging in an auction account open in the name of the LLC, funds from the LLC to the auction, winning bid, finalized payment. If you're going to be lending money, LLC is the name of the lender. Again, it's relatively easy to kind of extrapolate this and how it would work with different types of assets. The key thing to remember is that the IRA or the IRA owned LLC, whatever you've named it, is going to be the owner of whatever you're doing. So whether that is a crypto exchange account, whether that is the title of the owner on a property deed, whether that's the title of the lender on a mortgage or a promissory note, whatever it is, the LLC is the titled owner. And the other key thing to remember is that all the money has to flow to and fro from the investment that you've pursued and back to the LLC. And you cannot you have to maintain clear boundaries between your personal finances and this LLC. So the point where sometimes I tell people, maybe even use a different bank, right? If you bank with Chase, maybe have your local credit union do the business account for this. But you have to be very careful on making sure that the segregation between anything personal and your IRA and vice versa is maintained, especially if you're doing this type of thing where you have that much control. Again, key things to remember for the IRA LLC: have to be manager managed. It can include more people than just the IRA. Additional capital contributions can sometimes become an issue with multi-member LLCs because the ownership percentages have to be maintained, especially if you are going to be partnering personally on this. Again, typically no tax return is required if it's a single member entity. Some cases there may be a reason why you would need to do one, but typically not if it's a disregarded single member entity. And case law supports this kind of stuff. Going back to Swanson v. Commissioner back in '96, the TC, the tax court memo of TL Ellis. Again, there's other court cases I can point to if you want some more kind of review of the IRS taking a look at these things. But again, they have not come out in any of their rulings when they have examined these, and they have examined them to say that, hey, this is not allowable. Again, you're getting up against some areas where you need to be exceedingly careful, but the IRS generally doesn't necessarily have an issue. Here's a good infographic of kind of how everything works if you're more of a visual learner instead of my spoken word. Again, just kind of showing the flow chart of how things come in, how things go back. Another key thing to remember here is that if you want to ever take money out of the IRA, again, if this is a retirement account, this is not just something that needs to sit on an island. You eventually want to get some benefit out of this, right? You want to, do something personal with it, pay for some expenses. Again, it's your money at the end of the day, and if you ever wanted to use it, there's a proper order of operations for doing that, and the consequences for violating those rules can be pretty severe. So we'll get into that flowchart in a second, but that's kind of leading into my statements about, hey, making sure that you clearly separate your finances. Just because you have control of this checkbook does not mean that you should. Got ahead of myself. The statement I always like to make with this type of thing is that, and this is one of those times where I rarely speak in definitive statements, but there is never, and this is never, 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 there is never a time when you should ever write yourself a check from this LLC personally. Doesn't happen, hard stop. That's it. That's an important key concept to remember, because this IRA is subsequent and subordinate to your IRA. The reporting entity for anything that needs to come out of your IRA to you personally has to be born from the IRA custodian. So if you ever need to take a distribution, I'll show you the flowchart here in a second for how that was going to happen. But again, just because you have tight control of these IRA-owned assets doesn't mean that there is never an instance where you need to engage your custodian. There absolutely is, and it mainly comes into getting money out of the LLC to you personally, or putting more money into the LLC from the IRA. Again, maintaining the checkbook. Again, I just encourage people to use best accounting principles. If you've never balanced a checkbook before, YouTube videos on it. But just understanding the cash flows. Anything that is a profit or any type of distribution from an asset comes back to the IRA, not you personally. Remember, this LLC is property of the IRA, and the IRA is its own separate entity from you personally. Even though it is your retirement, it is its own separate entity. It is the one that gets to enjoy the benefits of all the investments being made. So anything going in, expenses going out, all remains directly in this checkbook. And really the only thing that you need to do from a custodial perspective on an annual basis is just report the value of this LLC to us. Essentially what we need to see on an annual basis is an unaudited balance sheet, basically the most basic equation of value: assets plus cash minus liabilities equaling V for value, right? So 1231, we need to see a bank statement, we need to see a balance sheet showing what you are invested in and the appropriate values. If there's any outstanding liabilities, take that out, and that's going to spit out the value. So that's what we need on an annual basis. And again, that is a snapshot as of 12/31 every year. Yes, for the brokerage. Again, the brokerage, we run our services through Axos Invest. If you're interested in doing that, we have it's a relationship that we have with them. I'm sure that they could, Axos, AXOS, can do it by any number of things, but I'd encourage you to go through the relationship we have. There's some additional features and stuff that's unlocked with kind of our interaction with them. So if it is something that you wanted to work towards, we can certainly connect you with them. You're not required to use them. Again, we just have a working relationship with them because they provide brokerage service to our IRA clients directly. But you could essentially, any brokerage that'll open up a LLC, a brokerage in the name of the LLC is fine. Again, no problem with that, but Axos was the one that I had mentioned earlier. What's the process for doing a Roth conversion from my checkbook traditional IRA? Well, that is a fun question to answer, and maybe I'd encourage, so there's a few different ways to look at it. Basically, we need a valuation of what is being converted. Now, there's a bunch of different ways you can do a conversion with a Checkbook LLC. You can either extract the assets and convert them individually. You can convert membership. And the cool thing is with converting LLC membership, there's potential discounts that can be taken as well. So from that perspective, it's definitely something I'd encourage you to reach out to me directly. It gets a little bit far in the weeds of some real specific stuff, and I don't, since we're kind of running up on time, I want to make sure we get through the last of this and get any questions done. But basically, it just involves evaluation and then determining whether or not you want to extract the assets and convert them individually or convert it at a high level at the LLC membership basis. IRAs do offer another interesting opportunity to partner. On the operating agreement, again, moving cash to and from, kind of covered that pretty well, is that you have to write a check back from the LLC or the trust to Advanta, then it's distributed to you. Remember, hard line, never, never, never should you ever write a check from your IRA, LLC, or trust to yourself personally. It has to come to the IRA first and then out to you so we can do proper reporting. And again, since we're running a little short on time, we did kind of cover the deal, but we'll just kind of go through a few of these case studies just to make sure we have time for everyone's questions. Again, Joe's real estate deal has 150 in a traditional IRA, is interested in investing in real estate, wants to do single family rental properties, finds a house for 100, needs 20,000 of work, projects a monthly $1,000 a month after repair cash flow. So in the same concept, opens the account, finds the property, works with Advanta directly. So then this case is not using an LLC, so you can kind of see how it differs. So same thing, he opens the account, but instead of focusing on the actual property purchase or the LLC purchase, we're going to focus on the property purchase. So contracts in the name of the IRA, we sign the contract. We review the settlement statement, the docs, the prorations, the estoppels, title policy. All of that is reviewed by Advanta. Anything that needs our signature is signed after the client approves it. And then ultimately we fund at closing. Then from there, Joe goes out, finds his tenant, directs all expenses to be paid from Advanta. We have an online portal. Everything is paid within 24 hours, or at least remitted for payment by 24 hours. And then Joe gets to track everything directly on his Advanta portal, expenses, income, all kind of good stuff directly here. Now, if you're going to go the LLC route, same thing happens with opening the account, but instead of us focusing on that property directly, Joe's still buying that property, but he's going to do it through a Checkbook Control LLC. So instead of us focusing once the account is open on the property, we're focusing on the LLC. So Joe at this point needs to choose the state to set up the LLC, choose the name for the LLC, the tax service to file the articles, everything that we went over as far as it needs to go. Remember, operating agreement, articles of organization, SS4 tax ID application, getting that bank account open. That is all the responsibility of Joe as the client to take care of. The only thing that we're going to coordinate with Joe in this case on is just making sure that that operating agreement meets our minimum requirement. Once we've done that and everything's gone through and funds have arrived, we'll move the funds out to the bank account that Joe has set up for the LLC. And then at that point, Joe is going to issue the payment and go through the closing through the LLC directly. And then any and all expenses are going to be paid from that LLC, not involving Advanta directly. Excuse me. The closing is going to be in the name of the LLC. So again, settlement statements, tax prorations, estoppels, title policies, deeds, all in the name of that LLC. Does not mention the IRA anywhere. And any documents that do need to be signed, again, contract, settlement statements, all that stuff has to be signed by Joe as the manager of the LLC. And then again, the exact same thing kind of runs with a trust, except in the trust case, there's a little bit less of an overhead from the state. So opening the account, the private trust document is generated, naming the IRA as the grantor and the beneficiary of the trust. Joe has to name a non-disqualified third party as the trustee. Trusts are not public record, which is nice if you don't want to deal with states. So, you don't have an articles of organization, you don't have all those kind of different things that go along with the state side of things. But you do still have a trust document, which is analogous to the operating agreement, and you are going to still have to get a tax ID number for that trust. so that you can have a bank account for the trust. And the big difference in this is just that Joe cannot be the manager, right? So everything with the LLC, from the trustee signing the purchase agreements, making sure that the property's in the name of the trust, all that kind of stuff still holds true. And again, is a very direct correlate is a direct corollary to what happens in the LLC. Just again, different type of document, a little bit different type of procedures, and just a little bit less common. Not saying it's better or worse. It's just personal preference of my clients, and typically clients like to act as their own IRA manager, IRA-owned LLC manager, so that's why they typically gravitate towards the LLC. Again, there's pros and cons to this. The pros from having us directly administer everything is it is infinitely easier to stay at arm's length. When you have us looking at everything, it is very easy to do. You have clear records of all your activity for everything. So it's definitely a pro of doing that. But some of the cons, you can't write checks for an immediate purchase with the IRA. If timing is of the essence for what you're doing, then yeah, an IRA definitely is not going to be as flexible as the LLC, especially with things that, like auctions, or especially cryptocurrency is a big one there. Having the LLC, while not, we're never going to say it's required for you to do something, but all else remaining equal, it might be the only option that you have if that's the direction that you want to go with us. Is certain auctions, things like cryptocurrency, there really just isn't a alternative to do it any other way. So again, I'm not going to tell you have to do something, but I think it kind of illustrates the use case and the need for that. So definitely is something to consider. And which strategy is right for you? Again, the type of asset that you're looking to invest in can drive a lot of that decision. Now, I'm never going to be the one to say and tell a client, hey, if you want to do this, you actually shouldn't go one way or another. But an example I'll kind of leave you with is back many moons ago, when I was working with a client, it was a woman came to me, and she was, kind of dead set on doing a LLC to buy a piece of rental property, right? One of her friends had told her it was a great way to go about things, and sure, why not? Well, the property was in a 55+ community. It already had a long-term tenant in there. It had on-site property management, and doing an LLC for something like that, wasn't really super beneficial to her. She didn't really need to be writing checks all the time. She already had property management. It was a basic real estate closing, and I just kind of explained it to her. I was like, you can definitely go the LLC route. And she had mentioned that she was kind of cost conscious about some things, and it was cheaper and a little bit more straightforward for her just to use that and have us do everything than not. So again, in that case, it just didn't really make a whole lot of sense for the LLC. The IRAs can typically offer degrees of liability protection. Again, I always encourage people to make sure you have proper insurance. And in some cases, a single member LLC might be it might offer no protection, as you would otherwise assume from limited liability company, than otherwise. So again, that use case just didn't really work out for her. But in that same scenario, if you're someone that wants to do that exact same thing, don't let that example dissuade you from it. Don't discount your personal preference when it comes to making decisions on how to structure things. If you're someone that feels that you absolutely just feel more comfortable doing everything, if you have that tight control and you understand the risks, again, don't discount that. There's a value to that if you want to go that route. So again, make sure you value your own kind of opinion, right, in this whole thing, as a very valid thing to stand on making a decision one way or another. But again, it's completely up to you as the client. I'm just trying here to make sure that you are able to make an informed decision one way or the other. And again, ultimately, some things do lead themselves more towards, having checkbook control than not. And the best way to do that is either, listening to these kind of webinars, or just give me a call directly, and we can walk through your specific use case as well. Again, I really do appreciate everyone being on with us today. If you want to check out more of our events, we have bi-weekly webinars. We have a podcast that I host every week as well, the Alternative Investing Advantage podcast. Again, really excited about all the stuff that we have going on. Again, all of our education is free. It's cataloged on YouTube. If you want a copy of these slides, they are attached as the handout to this presentation as well. And again, that's kind of what I have for everyone today. If there's any questions, I'll stick around for a little bit longer. I know we're a little bit over time. I do try to do my best to get these things wrapped up at the appointed time. But again, I did have some great questions, so wanted to make sure that we definitely got all those answered. So yeah, any questions for anyone? Go ahead and fire this in. I'll stick around for as long as it takes to get everyone sorted out. But again, thank you very much, everyone, for joining with us today.